And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, and a whole bunch of other fun stuff. So first, let's go ahead and get into our risk disclaimer screen, because there are risks with trading with Forex, and you should know what they are. You should know that you can lose some or all of your investment capital. But here are the disclaimers as required in the United States. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I'm also an aspiring prop firm trader, an aspiring funded prop firm trader with Audacity Capital and a couple of other companies that I'm working with. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held an NFA registration in the past. It was about 25 years ago. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And that's the bottom line on all that. The CFTC risk disclosure goes like this. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You can sustain a loss of some or all of your investment capital. So here we go. We have, this morning, we have the CPI coming in. Sometime 8:30 in about half an hour, about 25 minutes, 24, 26 minutes. And here's an article from CNBC trying to convince you that they know what they're talking about. 9 times out of 10, CNBC is wrong. At least that's been my experience. We don't know what the numbers are going to be until they come out. They could affect a lot of currencies, though. So let's go ahead and get into DXY. This is the main one it can experience. Here's the chat room. I'm going to get out of that because I need these things. And also, I do not recommend getting in that chat room, too. That chat room's kind of vicious. But at any rate, DXY, just get in there for entertainment and watch. DXY has been flat for a week now, basically. Hasn't really gone anywhere. It's gone up and down and up and down and gone right back to the same spot, which is 97 proper, which is exactly where it is right now. So it's kind of deciding on what's going to happen with CPI. The government, 4-day government shutdown or whatever it was, that happened is kind of a not sure what's going on with that, but the delayed CPI was supposed to be released last week, but it's coming out today. Euro versus the pound looks like euro is kind of winning slightly again. Euro versus the dollar. Here we have the euro versus the dollar, and it is usually the inverse of the DXY, and it's going down, which is kind of interesting. Not much. A little bit of fluctuation. It's in a heavy buy area right now at 1866. Turn my other computer back on. Oh, I'll do it in a minute. And with that, we go straight to the pound versus the yen. Pound versus the yen has gotten kind of hammered lately, and it's looked like it was like we had the possible carry trade breakdown happening. Carry trade unwind that everyone's been talking about on social media, saying, hell, carry trade's going to unwind, the world's going to hell. Maybe, but it's not going to be that today. It's still down, but it's showed some signs of life yesterday, but not enough to show that it's really a full recovery yet. Pound versus dollar, again, coming down on that, so we're expecting a little bit of a higher run on CPI, which means CPI, the markets are expecting CPI to go down a little bit, which would be interesting. Would be also nice. But CPI numbers are so fudged these days that it's kind of hard to tell what's that and what's reality. Really, the only reality you have with consumer prices is what you see at the grocery store and the gas pump in places. Rents are still going up, not by much, but not as much as home ownership is. But that's thanks to the the U.S. 30, which is right here. That's what drives your mortgages right there. And it is going up. It looks like it's pulled back a little bit. So we're getting some influx of money into the bond yields, because the bond yields are going down into government bonds. That's a thing. Not sure it's good or bad. It's a thing. Pound versus the yen. This is my favorite to trade lately, as long as it goes slowly. And it is kind of tapped out right down here, right at the part where we started asking if the carry trade is breaking down, 208.14. Initially, we were looking at 210. It blew through that and hit straight down to 208. That cost me some money. Not a lot, but a little bit. Well, it cost me more pride than anything. But that was did not help with things. As a matter of fact, we're down to 2,000. Oh, great. Made $17 yesterday or something like that. So not a huge day trading yesterday, but did get at least one winning trade in there, so we can see if I can slowly turn that back around into something profitable so I can win the challenge. Let's see, euro versus the yen. I'm still looking at a downward bias on this. So I'm thinking we could see this go straight down to 202 proper, or 200 proper, right down here, which would be the big, heavy churning area where it was for a long time before, July to October. 3 months it just churned around 200. So we'll see if that happens again. But from my perspective, I still see a very strong. Could see a mean reversion activity on that. That looks like that band is trying to close above the. Right now it is 208.38 is where the Bollinger Band is. We've got 205, 208.57. We get to close above that Bollinger Band. We're going to see a big bullish move. That's going to be a mean reversion. That's actually a mean reversion buy signal. When you have this close down aggressively below the two deviation Bollinger Band, and then the next candle closing above the two deviation Bollinger Band, there's like a 60 to 70% chance you're going to get a you're going to start getting a rebuild on that. So we'll see how today's close goes. If it closes above that Bollinger Band, it might be on for Monday. As far as getting back on track with the pound yen. See if the dollar yen is doing the same thing. Nope, dollar yen is not doing the same thing. Dollar yen could be headed further south. Euro yen, again, looking like it could be getting into a mean reversion strategy. Maybe, maybe not. Well, it hasn't fully developed yet, so we'll see how today's trading goes. Might be sitting on the sidelines most of the day today. I have somewhere to be at 10 o'clock, which means I will not be on my phone and not be in the office trading, so we'll see how that goes. UCAD, we are still 15 minutes away from CPI. Yeah, 20. UCAD had a nice run yesterday, 50 pip run yesterday, going right through this bullet buy area right here. We could see a buy right here at 136.44. That looks like it might be a good buying opportunity. It's got to get there first. It's still 20 pips south of that entry, and that entry is right there at resistance, possible support. So I don't know that I want to jump into that trade real quick. It's probably 136.60 might be better. Get on the other side of 50 by a chunk. But that was my strategy yesterday with the pound yen, and it went over and then came right back down. So it's still at 208.60. Well, but I digress. To the pound yen, again, the Northern American sides are not seeing the same mean reversion possibilities for the yen as the European ones are. So, like to see a big pullback in the yen. I'd like to see something I can see coming. So I would like to see that because I see that it could be a possible mean reversion setup of both the euro yen and the pound yen. But again, we don't have that quite laid out yet. Oil is being now it's consolidated right between 62 and 65. I don't really see that going anywhere but up right now. Closing, or if we get a close above that Bollinger Band, the median Bollinger Band, which is known as the moving average, then we might see more upward pressure on oil. Again, CPI is going to be the big. That's what everyone's waiting for right now. That hits in about 18 minutes. I will not be doing this I'll have this posted by then, I think. 70.50, big pullback in the Aussie versus the dollar, and a great big buying area right there. So that might be an opportunity to get into Aussie versus the dollar. Gold, big pullback in gold yesterday. A little bit of a retrace. We're finally going to see if we can get a weekly close below 5,000. That might be on tap today. Then again, if we, depending on how CPI falls, it could go the other direction. Platinum, big pullback on platinum yesterday too. And palladium and silver. All the metals pulled back yesterday, and it looks like they're back into selling territory. We'll see if they can hold their value, or see if it's time for that to do something different. With that, that's all I've got today. We've got CPI coming out in 18 minutes. Stay tuned for that. 17 minutes. So that'll be fun. In the meantime, you guys have a great one. If you like this video, then by all means, hit the thumbs up button. If you want to see more of these videos, then click the, or then subscribe to the channel, and YouTube will notify when I put these out. And lastly, if you have any comments, by all means, comment in the comment section, and I'll get back with you as soon as I can. In the meantime, you guys have a great one. Talk to you later. Bye.